Welcome back to XRP Radar. Hope you're having a great day wherever you're watching from. We're heading into Christmas week, and I need you to lock in for this one because what's happening right now around XRP does not line up with what most people think they're seeing on the surface. This year alone, we've witnessed more manipulation in the crypto markets than we've seen in the past 7 years combined, and that's not an exaggeration. At the exact same time, traditional markets like the S&P 500, the NASDAQ, and the Dow are pushing into new all-time highs. No recession panic, no systemic collapse headlines. Stocks are flying. And yet crypto, especially assets like XRP, has been pinned down, chopped up, and suppressed despite nonstop positive developments. That contradiction is not accidental. Today, I want to explain why I believe we're setting up for one of the largest wealth transfers we've ever seen, and why XRP specifically is positioned to decouple from the rest of the crypto market in a way that catches almost everyone off guard. Because here's the uncomfortable truth most people don't want to accept. Markets don't move based on what should happen in the short term. They move based on positioning. They move based on liquidity. And they move based on who knows what's coming next. Right now, we're seeing signs of stress and transition across the global financial system. Japan is flashing warning signals. Bond yields are breaking historical levels. Institutions are quietly preparing for something much bigger than a normal crypto cycle. And while retail is frustrated, exhausted, and questioning whether any of this is worth it anymore, the biggest players in the world are doing the opposite. They're accumulating. What makes this moment different from previous cycles is that we're no longer talking about speculation versus adoption. We're talking about infrastructure versus narrative. XRP sits much closer to the institutional side of that equation than almost any other digital asset. And that matters more now than it ever has. In this video, I'm going to break down why the disconnect between price and fundamentals has reached an extreme, how manipulation actually works during market transitions, what's unfolding in Japan and traditional finance right now, and why XRP is being positioned, not hyped, for a move that looks nothing like the last cycle. Stick with me, because once you see how all of this connects, it becomes very hard to unsee. Now, let's slow this down and actually look at what's happening without reacting emotionally, because this is where most people lose the plot. When you see the S&P 500, the NASDAQ, and the Dow sitting at or near all-time highs, while Bitcoin is down nearly 30% from its peak, and XRP remains suppressed despite nonstop positive developments, that disconnect should immediately raise a red flag. Markets don't behave like this organically. This is not normal price discovery. This is controlled liquidity. In 2025, we've seen more aggressive and obvious manipulation in crypto than at any point in the last 7 years, including periods with real scandals like FTX. That alone tells you something important. This isn't fear-driven selling. This is deliberate positioning. Market makers, OTC desks, and large institutions don't need headlines or hype. They move quietly, accumulate when attention is low, and suppress volatility while building positions. Retail thinks price leads fundamentals, but in reality, fundamentals move first and price follows later. What makes this period even more interesting is that it's happening while traditional markets celebrate new highs. Capital hasn't disappeared, liquidity hasn't vanished, it's just being redirected. And assets directly tied to institutional infrastructure, regulatory clarity, and real-world financial rails are being treated very differently than speculative crypto plays. XRP sits in that category whether people like it or not. While retail focuses on daily candles and short-term frustration, institutions are preparing for structural change. Blockchain adoption is no longer theoretical. It's happening across banking, payments, custody, and settlement layers. And assets that can plug directly into that system aren't being accumulated on open exchanges. They're being accumulated quietly through OTC markets and dark pools where price impact is minimal and visibility is low. That's why the narrative feels confusing. You're being told nothing is happening while everything important is happening behind the scenes. When price doesn't react to good news, it doesn't mean the news doesn't matter. It usually means positioning is still underway. Once that phase ends, price moves violently and without warning. That's how XRP has always behaved, and there's no reason to believe this cycle will be different. Now let's connect the dots. People keep asking why XRP isn't moving while stocks print new all-time highs. This disconnect isn't random, it's structural. What you're seeing isn't weakness, it's positioning. When capital prepares for a transition, it doesn't chase volatility. It goes quiet and accumulates where liquidity is deepest and risk is lowest. That's exactly what's happening now. Japan's bond yields hitting multi-decade highs aren't a local issue, they're a global liquidity warning. For decades, Japan exported cheap money worldwide. When that system strains, liquidity doesn't vanish, it repositions. Institutions don't chase memes in moments like this, they look for infrastructure. That's where XRP comes in. XRP isn't being viewed as just another crypto, but as a liquidity tool, settlement layer, and bridge asset. When systemic risk rises, assets that reduce friction and settlement risk gain value. That's why suppression and quiet accumulation often happen before repricing. Wall Street behavior confirms this. JP Morgan exploring crypto trading is plumbing, not hype. BlackRock signaling digital asset exposure isn't excitement, it's preparation. XRP is diverging because it runs on utility demand, not speculation. Manipulation isn't just price control, it's expectation control. Orderly markets allow institutions to finish positioning. That's where decoupling becomes real. XRP doesn't need Bitcoin forever. Bitcoin moves on macro liquidity. XRP moves on settlement demand and regulation. When liquidity rotates, it flows efficiently, compliantly, and at scale, and XRP fits that role. This isn't hype, it's engineering, and engineering always looks boring before it matters. Nothing here is financial advice. Stay patient, stay rational, stay informed. I'll see you in the next one.